It really wasn't that long ago that the International Monetary Fund, the IMF, was sounding some serious alarm bells about Egypt's economy. But fast forward to today, well, the tune has completely changed. Now it's all about praise and confidence. So, what in the world is behind this incredible turnaround? Let's dive in and figure it out.
I mean, the shift in language here is just night and day. On one hand, you had the IMF talking about their concerns over delayed reforms and a privatization program that was moving way too slowly. And now, they're praising economic stability and high growth. It is a complete 180-degree turn, and it really makes you ask, what happened?
And yeah, that's the million-dollar question we're tackling today. What exactly went down? How did Egypt manage to so completely flip the script with one of the planet's most influential financial institutions?
Well, the answer really lies in a series of pretty bold, decisive economic moves. So let's break down the key policies that didn't just stabilize things, but actually managed to win over the IMF in the process.
Okay, so it all really boils down to two main pillars. First, a really aggressive monetary policy to wrestle inflation to the ground. And second, some serious fiscal discipline to get the government's own books in order. Let's take a closer look at each one of these.
So, what are we actually talking about when we say tight monetary policy? Well, to put it simply, it's when a country's central bank deliberately jacks up interest rates. The goal is to make borrowing money more expensive. That cools down spending across the entire economy, which in turn helps to bring down inflation. You can think of it as some tough but very necessary medicine.
And in Egypt's case, it looks like that medicine is really working. The IMF specifically called out how effective this policy has been. Just look at the results. Inflation is finally on a downward path. It hit 12.3% in November, and that's even after a fuel price hike. This puts them on a clear trajectory towards their long-term goal of about 7%.
All right, on to that second pillar, fiscal discipline. Now, this is all about the government's own budget. It means being really smart and careful about managing spending and revenue so you don't have to keep piling on more and more debt. It's basically like balancing your own checkbook, just on the scale of an entire country. And the proof is right here in this one number, 3%. Egypt actually managed to achieve a primary surplus of 3% of its GDP. Now, what that means is the government brought in more money than it spent, and that's before you even factor in interest payments on its debt. Pulling off a surplus like this is a massive signal of responsible financial management, and it's absolutely one of the key reasons the IMF started seeing Egypt in a new light.
Okay, so we've talked about the strategy. Now for the fun part. Let's look at the report card. How did these policies actually translate into real, tangible results for the economy? Let's kick things off with the big headline number, 5.3%. That was the economic growth rate in just the first quarter of the fiscal year. You have to remember, in a global economy that's facing a lot of headwinds, a number like this isn't just good. It's a huge sign of some serious forward momentum. And this chart really puts that number into perspective, doesn't it? Growth was already pretty solid in the previous year at 4.4%. But making that leap up to 5.3% shows that the economy isn't just growing, it's actually accelerating. And that is exactly the kind of trend that gets the world's attention. So where's all this growth coming from? Well, the IMF report points to a few key areas. We're seeing real strength in the non-oil manufacturing sector, a massive rebound in tourism, which is fantastic to see, and a recovery in revenues from the super important Suez Canal. It's a healthy, diversified mix, and that's always a really positive sign for the future.
And when you put all these pieces of the puzzle together, you've got the solid growth, the disciplined budget, the falling inflation. It all points to this one really powerful conclusion. Confidence in Egypt's economy is back, both at home and abroad. People are starting to believe that things are truly heading in the right direction.
And if you want tangible proof of that confidence, here it is, $30 billion. That's how much foreign investment money has poured into Egyptian debt. I mean, let that sink in. When global investors are willing to put that kind of capital on the line, it is one of the strongest endorsements a country's economy can get. And to back all of this up, Egypt has built up a really impressive financial safety net. Its foreign currency reserves have swelled to $56 billion. Having a cushion like that is just crucial. It means the country is much better equipped to handle any unexpected shocks from the global economy, which of course gives investors even more peace of mind. But for all this great news, the job is far from finished. To make sure this turnaround really lasts, there are still some pretty big challenges on the road ahead. So let's take a quick look at what comes next. So the path forward really has a few key goals. First, they've got to keep up the fight to bring inflation all the way down to that long-term target. Second, they have to figure out how to sustain this high rate of growth. And finally, and this is a big one, they need to push ahead with deeper structural reforms, especially on things like privatization. The whole goal here is to build an economy that's not just stable, but truly resilient. And that brings us to the final and maybe the most important question of all. Egypt has achieved macroeconomic stability, and that is a massive accomplishment. But can that stability be translated into lasting, widespread prosperity for the Egyptian people? That, right there, is the next chapter in this incredible story.